Hello and welcome back to another episode of the Investor Financing Podcast. On today's show, we're going to talk about how this individual, our guest today, was a top producing real estate broker. A lot of people out here that are listening or watching this in the future are probably a real estate professional. Maybe you're a mortgage broker, maybe you're a real estate broker. And let's face it, I've been in real estate for 20 plus years, and it is a constant grind. Although some people put systems in place and do a much better job than others. But at the end of the day, the reason I got into real estate was to own real estate, because that's how you win the game of Monopoly. And I heard it best. I think I heard it on one of your podcasts that you were interviewed on. Please welcome Chris Salerno to the show. He resides in the Carolinas, in North Carolina.
Yep, Charlotte, North Carolina.
Charlotte, the Texas Triangle. I was going to say it's the what's the triangle? Is it just called the triangle?
It's in Raleigh, so that's about 3 hours north of us. We're actually, a lot of people don't know, Charlotte is the second biggest financial district in the United States, right after Manhattan.
Yeah, there's huge banks. I knew that, and that's you guys are you guys have been like on the top real estate markets for the last like 6-7 years. I mean, it's just like booming. It's like Texas right now.
Oh, yeah. It's growing substantially. It's unbelievable. My girlfriend, she lives in a high rise, and out of her window, we counted the other night 11 cranes just in South Charlotte, and we couldn't even see the city. But I know as of where our office sits, because I can see the skyline, there are around 23 cranes right now that's building.
What does your crystal ball tell you? Like you're seeing a lot of doom and gloom and in the real estate market, especially on YouTube right now. You got all these experts saying, "Oh, this and that." And then jobs report comes out and jobs are strong. There's, I think they added like a couple 100,000 jobs. So like there's a lot of contradicting news out there, but it seems like at the end of the day, there's a shortage of rental properties, right? So if you're in real estate and you can buy and hold and weather the storm, I'm just interested in your take right now of like where the market is and your thoughts about acquiring. I know, let me give you a little backstory. Like when you decide to get into multifamily, within 7 months, you own like close to 400 units. So you like quickly dove in and now you have like $55-60 million of assets, I believe, and growing, maybe more since I heard that.
Yeah, right now we have around over 140. In 6 months from now, we should double our portfolio and be around 320.
Whoa. Okay. So that I was listening to some old stats. That was probably
an old podcast.
That was like 7 months of your multifamily. You got up to like $45 million of assets. Yeah. So you're at about 140. And so you're really growing this quickly because this has only been 2 years?
3 years.
3 years. 3 years. What's made you, so I was listening to some of your backstory. You got into real estate, you started crushing it, you built a team, built systems, you merged your Keller Williams office with another Keller Williams office, which is one of the top teams in the U.S. for Keller Williams. What's made you successful in real estate brokerage, and then how did you transition those skills into multifamily?
Yeah, that's a great question. What made me successful in real estate brokerage is I was willing to do what a lot of people weren't. My first year, I did over 75 open houses. From there, I mastered the cold calling industry. I realized door knocking was a waste of my time. I spent all day, and the amount of time you're putting into it and the return on your basically investment of that time was not there, in my opinion, in Charlotte. So I then ended up mastering cold calling and selling over the phone. I did 2 listing appointments over the phone and got them to so it was very beneficial in regards to that. So I learned how to master cold calling, how to speak over the phone, and that has helped me in creating QC Capital. My main goal with the company is operations of the company and raising a substantial amount of capital for the company. And you have to do that, and it really pays to know how to speak to when you are speaking to investors, know what to say, how to say it. Know how to have high level conversations with them so that you can raise capital. So that has helped tremendously. And then operating the number one team at the time in the Carolinas and 4th in the world with Keller Williams helped tremendously, definitely when it comes to operating a high-level business team. That's one thing that as we get to know each other, and everyone who knows me is I love business. I was just in New York City last weekend, and my girlfriend and I were in a famous diner, and she said, "Chris, how much do you think they make in annual revenue?" And I said, give me a second. I looked around. I started calculating everything in my head. I said, they probably bring in 45 to 50 million annually gross. She goes, there's no way. I said, let's call over the manager. Called over the manager. Manager swiped his card on what their average gross was just for that day. And it was in line with their annual gross that I told her. And she goes, how'd you know that? And I said, I analyze businesses. I've always loved to analyze businesses, and I break it all down in my head to then get to that range. And I was spot on, and we confirmed it with the manager, and he says, yeah, you're right.
Yeah, that's incredible that when you look around at some of these boring businesses that you would never want to own, or you think you don't want to own, then you're like, even like these HVAC companies, there's so much money that you don't even think about that's passing through. So it's like you got to be in the flow to get this money, right? And then I like how you're really like a systems oriented person. Like that's what I think Keller Williams does a really good job of doing is teaching you systems on how to grow a team. Where other brokerages fail on that, I think Keller Williams is like that's like the strong point. If you want to grow like a business, Keller Williams is really good at that. We didn't really touch on it, but your thoughts on the economy. I know you don't have a crystal ball, but like, you know, you're obviously growing and doubling and tripling and quadrupling every year. So you're pretty bullish in the multifamily sector. I mean, it looks like if you look back historically, right, multifamily's always been during recessions, been a solid asset class. What's your take on the whole market?
Yeah, multifamily is not going away. There's a huge multifamily shortage. 4.3 million needs to be developed of units before 2035. I think that number is going to just keep increasing. It increased and over doubled due to COVID. Every 10 years, there is some sort of a recession or market correction. We saw that with COVID. We saw that in 08. We saw that in 2000 with the dot-com crash. We saw in a financial crash of 1990. Every 10 years, there's been a recession or a market correction. I think in another 10 years, there's going to do it. There's going to be some sort of recession or market correction. Historically, for the past 5 decades, there's been something. So I think that's going to put on an even larger damper on the shortage of multifamily housing. Thankfully, you know, they are increasing interest rates. If you can afford a $500,000 house right now, or excuse me, in Q1 of last year in January, you can afford a $500,000 house then. Right now, due to the interest rate climb, you can probably only afford a $325,000 house. And when they do the next one, it'll probably be $275,000. Well, you tell me, especially in this hot market here in Charlotte, where you're going to find a good house and a great location for $275,000. You're not. So what you're going to have to do is you're going to have to go rent. And so all of our occupancy is going to keep climbing to 100%. That's how it is for all the properties we have. We're pre-leased at 100% across the board. And what's that mean? Well, the demand is there. We might as well start increasing our rents. So you're going to see rents keep rising. I don't think there's going to be a huge correction in the multifamily industry. It's a very solid market. Supply is extremely low. I think right now is the time to buy. I have a very good friend or a friend of mine at Northwestern Mutual Insurance Company. He deals with their equity to place their equity into multifamily. And I realized that getting into multifamily, you have so many insurance companies. Yesterday, I had a call with University of Michigan Endowment. You have endowments of colleges invest. And one thing funny, too, is our last deal, we had a church invest into our deal. A church. It kind of caught me off guard at first, but I was like, okay. And when I speak to them, they agree that right now is the time to buy in the next 6 to 8 months because interest rates are slightly higher, and they're going to creep up. Next 3 to 7 years, they all believe, and as do I, that interest rates are going to taper down. They're not going to hover at 7 to 10% across the board. They're going to start tapering back down anywhere from 4 to 6%. That's going to give us the ability to sell these properties that we're buying at higher interest rates for a huge profit. And so that's our main focus right now, is acquiring as much assets as we can and in great locations. When I first got into as a residential broker, studying to get my license in the Carolinas, I remember my teacher at the time saying location, location, location. That's the number one thing. I mean, look at Manhattan. If you're buying on 42nd Street, on a great location right there by Times Square, it's location, location, location compared to buying out in the Bronx or Brooklyn. So when it comes to buying assets, we're buying assets in great locations. very close proximity to Chick-fil-A's, Starbucks, Targets, because they do a tremendous amount of demographic research on who's willing to pay $8 for a cup of coffee, who's willing to, to buy Chick-fil-A, and then also who's willing to shop at Target, which is a little more pricier than Walmart, who's willing to shop at Target. So we kind of piggyback off their research that they've done into locating a great property where we feel very strongly that is going to perform extremely well for years to come.
Hi, this is Beau, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link. So how did you take your Keller Williams team building experience into the multifamily world? How'd you build systems? I was listening, you have like an acquisition manager. You do it a little different than other multifamily investors or syndicators. It sounded like you have a acquisition arm where they vet the deal, they run it through your underwriting analysis, they know what you're looking for, and then that's when it comes to you. And really your responsibilities with the organization is capital raising, and then you also have operational division as well?
Correct. Yeah, that's right. So my main focus is really focusing on raising capital, large amount of capital through the company. We do have a director of investor relations that just came on to also raise capital for us as well. We just launched QC Capital Fund 2. When it comes to acquisitions and deal flow, I cannot see every deal, nor do I want to see every deal. If I do, then I can't operate the company. So it goes through a strategic system strategy. The deal comes into our director of acquisitions. He vets the deal, makes sure it fits our criteria. If it doesn't, trash. So anything, if it doesn't fit our criteria, it goes into the trash. But he vets the deal. Once it fits our criteria, he does a preliminary underwriting on the deal. And that's a series of checklists that he has to go through. Once it passes that, then that goes into our initial underwriting department. Well, then they'll do a deep scrub of the deal. Once they do a deep scrub of the deal, right now there's best and final, and there's there's a call for offers, but we're seeing a lot that it's just really submit as you go. Because of the volatility in the debt market, we're seeing sellers throw their property on the market, and then brokers say, hey, submit whenever you want. So we're seeing that a lot. So it's not kind of that traditional where we used to see, here's call for offers, here's best and final, and it's a streamlined process. Now, some deals are like that. However, we're not seeing much of that. Once it passes that, and it actually passes, they submit an LOI. They let me know, hey, we're submitting an LOI at this number. I say, that's fine. They submit an LOI. If we get an acceptance, or if they get back with the broker and the broker's like, yeah, we're very close, can you come up to this number, or, I think we can make something work, then it gets on my desk. And then I try to break the deal. I try to, worst case scenario, try to break the deal. What's my worst case scenario? How do we lose all of our money? That's what I try to do, because I want to know my worst case scenario, because I want to know stress testing the deal. How much stress can this deal handle? After doing that, and after it passes mine, and I feel comfortable with it, I then go ahead and let the team know. Let's start CCing me on those emails. Let me get an idea. We then have a seller call. I run the seller call to get an idea from the seller, what their motivation is, where are we at with pricing, should we go up, should we not go up, things like that. After that seller call, that's when we'll submit and start the final process, and then go into negotiating the PSA. Currently, we have a deal we just got awarded, and we're going to negotiating PSA today in Houston. Beautiful deal in the medical center, and that was exactly the process I just explained to you how that deal came about.
Very cool. That's awesome. What advice do you have? Obviously, you were a real estate broker or agent and ran a successful team, and we're probably crushing it, making pretty good commissions. I think you probably invested and bought single families and maybe did some flips. But I think a lot of real estate agents, I'm also a real estate broker, but don't really practice anymore that realm. But I think the problem with most real estate agents is that they don't understand investments. And to me, if I'm buying a property, even if it's a primary residence, I want to talk to an agent that's savvy about ownership and advantages, and like, this is your starting point, but maybe you can go into a duplex and triplex. What advice would you have for a real estate agent out there that's like, listen, I don't know anything. I don't even know what cost segregation is. Like, I think this is ultra important for people. I have a lot of friends, and I'll talk about my brother. He makes a boatload of money W-2. And I'm like, man, you should be learning about cost segregation. You should be investing at minimum as a limited partner. I think a lot of these people that are doing very well in brokerage sales need to at minimum be investing in as an LP in multifamily or some kind of syndication and commercial for the tax benefits, to learn about other forms of real estate. I think it makes you more well-rounded. Doesn't that shock you that so many agents don't own real estate?
It shocks me that so many agents don't invest as an LP. When I was a real estate agent, I had to file quarterly taxes. And everyone out there who files quarterly taxes know you make a certain amount of money to start filing quarterly taxes because they penalize you if you don't. I had to file quarterly taxes. And if someone told me that, hey, Chris, instead of you writing over $20,000 checks on a quarterly basis to Uncle Sam, you can write 0 checks, my ears would perk up and say, where's the line? I'll go wait outside the front door. Because as a real estate professional, you can utilize 100% of the tax benefits. And what a lot of people don't know is that this is the last year for bonus depreciation. Next year, it goes to 80%. Year after, it goes to 60, 40, 20, and then 0 unless it gets reinstated back into the house and office. So after this year, it's the last year for bonus depreciation. It starts ticking down. Last year for 100% is this year. Then it's 80, 60, 40, 20. So you might as well take advantage of it now if you're listening, because if you're filing as a real estate professional, now I'm not a CPA, please consult your CPA, but you can go ahead and take advantage of 100% of that just like I do. So, it shocked me. And even the gentleman who owns the company who I used to operate doesn't know about this. And I was texting him 2 weeks ago, and I was like, you're paying over $400,000 a year just in taxes. You need to get on this train. It's mind-boggling that they don't understand it and don't know it. So I'm very pleased, when I got into the industry, to find out about and how lucrative the tax breaks are for real estate professionals in the business.
Yeah, it was funny. I was talking to my friend, and he runs a private lending fund. And he makes a couple $1,000,000 a year. And I go, dude, do you know anything about cost segregation? Do you want to and he didn't know. And I'm like, how much are you paying? Are you paying taxes? How much are you paying in taxes a year? He's paying, I would probably guess he's paying $400,000, $500,000, $600,000 a year in taxes, right? And it just blows my mind. One of my multifamily friends said, he made like $4 or $5 million a couple years back when I was talking to him. And he's like, he said, I made over $4 million, but I had $5.4 million in write-offs because through accelerated depreciation. So hence I don't pay any taxes. And everybody's like, well, how do these like Donald Trumps of the world? And because they do.
They get mad at them, but what are they doing? They're reading the Monopoly rule book. That's what they're doing. They're reading the rules in the before they play the game Monopoly to understand them. Now, Uncle Sam's not going to knock on your door and say, hey guys, have you guys heard about cost segregation or bonus depreciation? They're not going to do that. You got to read the rules. Yeah,
it's crazy. That's why we do these podcasts, people. I hope you're listening or watching this and going, okay, let's take some notes. Whether you're a real estate broker, if you're a real estate broker, you can get into some syndications for $50,000 or $100,000, depending on if it takes accredited investors or not. I think it's a great place to start if you're not you seem to be like one of those guys that probably didn't invest as an LP and just went straight into as a syndicator. But not everybody's wired like you are. So if you're you're not that type, then you should probably invest as an LP first. And that's a great way to learn. You learn about the PPMs, the paperwork, what the different types of funds. So I think that would be a really good starting. But I think people need to be educated. I think that's why I do this show on different topics. And it's like, this is like bread and butter to create wealth. I mean, I'm looking at like what you just told me about your, over 140 million in assets under management in 3 years, which is phenomenal. I mean, your net worth has probably done very well. And, if you look back, I'm sure you were always pretty financially free as a broker. You did well and made a lot of money as commission, but you didn't have the tax benefits. You weren't creating real wealth like you are now.
Being rich, having money, and creating wealth are all different. They are all different. I mean, just say, I want to be wealthy. That's a strong word compared to I want to be rich. Wealthy is a very strong and dominant word, and it's totally different when it comes to how much capital you have, in my opinion.
When I heard you talk, really, I think the difference between somebody like you and somebody who's not maybe succeeding in the space is that, if I heard you correctly, like, you did the work that people didn't want to do. Right. You held open houses. I bet to this day you still, like, your primary focus is capital raising. So you're still on the phone, right? That's your strong point. So anybody out there, I have a friend that does small to mid-sized multifamily in the Bay Area, and he's always been he's a broker. He's been the top producer in that area forever. And like, he doesn't need to work anymore. He owns a lot of multifamily, and he makes, he's made $3 million plus in commissions for the last several years. And he says, Beau, you know what? To this day, I still lock myself in my office and make phone calls because that's where all the money's being made. And I think people are afraid to do that. And that's really, at the end of the day, it sounds like that you've really grown your business so successfully is that you can TTP, talk to people.
That's the biggest thing is learn how to speak to people. And when I give advice to the younger generation, because I get people reaching out through my Instagram and things like that to ask for advice, learn how to speak to people. That's the biggest thing. I used to be, when I cold called individuals, I used to want to cold call in a room by myself. Now you can put me in front of an auditorium of 1,000 people and I'll cold call. Why? Because I don't care. I don't care for the outcome. If you cuss me out over the phone, if you yell at me over the phone, I don't care. You're not going to hurt my feelings. I'll just go on to the next person. And I think people take that too seriously. People wrap their feelings too much up into the business aspect of things. And if you take that feelings out, you're fearful. Those feelings create a certain amount of fear in yourself, which you don't want to do or take action of anything. And so take some of that feelings out. Now, I'm not saying all of it. I mean, I have feelings for our investing partners. When one called me last week and his brother passed away, we sent something to his door. Now, those are feelings. When it comes to that, take some of those feelings out, though, in the business aspect of things, and you're going to see yourself not being so fearful to take action on things. And I noticed that. And when doing that, I had the ability to call. We have the ability in this time period right now that we have unlimited resources for free. YouTube. Hop on YouTube. There's everything on YouTube. I used to watch on a daily basis 5-6 times a day David Rubenstein, CEO and founder of Carlisle. He runs the Rubenstein Show for Bloomsburg. I watch his YouTube videos. Why? He interviews all prominent, wealthy, billionaires, and powerful people around the world. Those individuals speak differently. I analyze how they speak, what they say, the words they say, the sentences, how they formulate the sentences. And that has helped me into growing what I have today. And so that's the biggest thing is if you don't know how to speak, or if you feel like you don't know how to properly word, certain sentences or type of pitches, go on YouTube and listen to how very successful people word their sentences, how they speak, because that's going to help you in your business, because it's helped me. So.
And don't worry if you're not perfect. If you stutter a little bit, if you say a little bit, you're going to get better and better with time. And the key is have no fear and master your mindset. And that's really, I think, the number one thing.
Have no fear, master the mindset. And if you're wrong, say you're wrong. I'm wrong all the time, and I'm willing to admit I'm wrong, and I'm willing to tell my employees, yes, you are right. Let's do it your way. I'm willing to do that, and I think that's what separates certain leaders from other leaders is admitting when they're wrong, and taking action and using that mindset and that positivity to grow.
Kind of rounding out the conversation, are you really you're obviously very self-motivated, self-driven, but what do you do kind of to keep yourself at a top level? Is there anything, the miracle mornings, or what really is your kind of go-to for just personal development?
Yeah. So I realized I've studied a lot of billionaires. and thankfully being in certain rooms with them. The Miracle Morning's a great book from what I've seen. I'm not a fan of, I go to sleep very late, so I'm a fan of making sure I get a certain amount of sleep throughout the night to be at fully optimized operational capacity in my mentally state throughout the day. What I do that has helped me tremendously is meditation in the mornings and the evenings. I meditate in the mornings and in the evenings, and that has helped me get my mind to the right place throughout the day to prepare me for the week, to operate a company and to grow a company substantially to where we want it to be. And so I'm a firm believer of meditation. There's multiple different types, but I'm a firm believer of meditation and mindset because your mind does control your whole body and controls your thoughts too, which your thoughts can be, mainly thoughts are negative, but if you can turn them around to be positive, you're going to see your whole life change.
Do you do like some kind of guided meditation, or is it just whatever you're feeling? Is there a certain?
Yeah, so my meditation's a little different. I do my meditation in the shower in the mornings and in the evenings because of the sound of the water, and I'll mix it up. Sometimes I will just focus on my breathing, inhaling, exhaling, and clearing my mind of no thoughts. And then other times I just let thoughts go into my mind and let those wander. And then there's certain times I go real deep into thinking, business strategy and things like that. But I mix it up into a variety when I meditate. But I highly recommend it. There's a book I've listened to that I also recommend on it called Think Like a Monk. That's a great book. Talks about meditation, talks about thinking. And then there's a couple other books about thoughts on how your mind creates certain type of thoughts, both positive and negative, and how to really think about the positive of any negative situation.
Awesome. Well, thank you so much for this interview. It was great. It was high energy. I think I got a lot of. I know I got a lot out of it. I know people when they see this and hear this in the future, and I think it really comes down to taking massive action, making phone calls, doing things that others won't do, like holding open houses. And this is just whatever industry you guys are in that you're listening to. And then think about the world as a monopoly board, that you want to be the person that owns the big buildings that gets the most cash flow. Yeah. And then cost segregation.
Love it.
And
we got 6 more months till it starts creeping down.
There we go. Where can people follow you?
Yep, you can follow me on Instagram. It's Chris_Salerno_. I encourage everyone to go to our website, which is qccapitalgroup.com. In the top right-hand corner, it's called Become an Investing Partner. Fill out that information. One of our team members will be in touch with you in regards to potential partnership. And the best thing is too, everything we just talked about, everything I've learned over the past 3.5, 4 years in the space, I decided to write a book called the Multifamily Real Estate Investing Booklet Part 1. You can type it in on Amazon. It's only $6.99. I don't make any profit from it. It's just a break-even number. And that's to help individuals really gain knowledge, start investing as an LP, but understanding the nitty and gritty of how all this is put together so they can feel comfortable.
Thank you so much. I hope everybody got a lot out of this because, listen, people, this is what you need to do. If you're a real estate agent, if you're a W-2 employee, you need to get in the game. Start as an LP. It's pretty painless. Find a good operator that you resonate with. Do your due diligence. Look at their track record. Look at where they're buying their assets, and get started and get the advantages of owning commercial assets with a team in place. So it's a great. Thank you so much, and we'll see you on the next episode.
Thanks. Bye.